Good afternoon, ladies and gentlemen. I am JC Peretz, founder of AllStarCharts.com, and I'm here with the man, Mr. Jeff Macke. How are you?
Things are a little dark out there, JC. I'm not gonna lie. Consumerville is turning a little grisly. Sometimes it's sunny, sometimes it rains. It's raining. I held my hand out. There's a little sleet, a little rain, but that's okay. That's where the opportunities are.
No question. New long position put on today, which I'm very excited about. Listen, people are talking recessions. People are talking about tariffs. United States, 70% of that economy is the consumer. So I think this is really important. My mom called me yesterday, Jeff, wondering whether she should liquidate her entire retirement account. My mother, not once in my entire life, has ever called me asking me about the stock market. I've been doing this professionally for over 2 decades. Get a call from Ma. Son, should I liquidate my... Oh, you know why? Because she saw the experts, quote unquote, experts on Instagram. I swear to God. The experts on Instagram suggested that the recession's here. She can not afford to get wiped out on her retirement account. How do you feel about that from a sentiment indicator?
I feel super good. And I'm going to pair that. I like it when the sentiment indicators pile up. I got a call from a friend of a friend in high school today, just asking me if I thought the market was getting a little irrational, getting a little crazy to the downside, getting a little, maybe it's time to bail out because, this could be a harbinger of things to come. So, we've got the anecdotes here. We don't quite have enough fear, but we also have just relentless selling. And you're a chartist, man. If you flip this upside down, people are buying this rally. People are loving the way these things are moving if you flip it upside down. But in the reality we live in, every day is just kind of another excuse to sort of sell the retail, sell the consumer. I never like to bet against the consumer, but I will in fact take a shot against the earnings that some of these retailers are going to make over the first 6 months. And that's what all that tariff stuff is. That's what every time a trade war headline comes up, the reaction is, I don't know how much that's going to cost, but it's going to be expensive and I don't want to get in front of it.
It's interesting in a time like this, particularly for the consumer, like having that shopping list of the types of things that you'd want to buy on pullbacks. Like I said, you put one on today, as we get more data, as things start to stabilize, putting on more and more trades as time goes on. We're going to talk about that in a minute. Guys, if you don't know Jeff Macke, we'll get into it now in a minute. But you need to know who Jeff Macke is. I know a lot of people already know you, but if you don't, we'll get into that. We'll talk about the state of the markets. Like, where are we at? Like, what does all of this mean for the consumer? I can tell you what I see. I can tell you what the things that are out there mean to me. Things like copper, things like some of the rotation that we're seeing. But as far as the consumer's concerned, I'm very interested. We're going to talk about the process that you go through to look for opportunities from both the long side and the short side. That's the beauty of the consumer. There's always winners. There's always losers. Regardless of the type of market environment that we're in, whether it's a bull market or bear market, always winners and losers. And we're going to talk about the recent winners and some of the ways we can replicate that moving forward. So before we get there, folks, let's take a step back for 1 second. If you don't know Jeff Macke, I don't know if you've been living under a rock. I don't know where you've been, but everybody knows Jeff Macke, and it's important that you know that. Jeff, why are you so popular? Why does everybody know you?
I'm not sure, man. I've been doing this for 30 years. You hang around long enough and you learn not to read about yourself. And so I don't know why everyone knows me. I started out on America Online. I think it's just kind of a lucky birth timing type of thing because I started doing stocks right around the same time the internet started coming on the board. And so I was a member of the Motley Fool guy. Then probably I'm most known for the CNBC experience where I helped start a show called Fast Money that's still airing today. I understand it's still reasonably popular, but I did that during the great financial crisis, which was a real lesson, and it kind of ties into today, where when we started that program, it was the middle of the bull market. It was post-dot-com crash, about 2004 or 5, kind of going into that little bit of euphoria that we had going into 2008. People had me autograph money. People came up to me in the streets. They marketed us like a boy band. It was kind of crazy. It's kind of weird that it happened to me, but it did. And by the end of that, I had full-grown men coming up to me, literally in Grand Central Station, asking me what was going to happen to their Citi stock because they had their money in GM and Citi and all these blue chips that were dying, that were flat out dying. It was a great financial crisis, man. And it it was grim. We've talked about it before. It was like telling America their dog's going to die every single night. You'd come on and you just say, you know what, Lehman's gone. And I hung out with a bunch of guys last night at a party that were rich last night, 3 nights ago. And last night they were penniless because now they couldn't figure out their mortgage. So I've seen that. I've been there. I've done all this stuff before. Every sell off has a different flavor to it because history doesn't repeat exactly, but it rhymes. And so they're all kind of the same, but a little bit different. This is the same type of thing where we're just going to have a lot of fear. And what it amounts to is you need some sort of reason to buy stocks. And right now, no matter how bullish you want to get on the consumer, all of a sudden a tariff headline crosses the transom. Today, we had some sort of Walmart headline where China and Walmart are going to get together to talk about tariffs. Again, that's another catalyst where I don't know what that's going to cost, but probably a lot. It's either going to come out of Walmart's profits or the consumer. And either way, that's kind of bad for this sector and the market as a whole.
So, folks, Jeff obviously has a few cycles under his belt here. We're going to get into the markets now. Actually, Spencer just pulled up this headline from October of 2008, right in the depths of the financial crisis. Jeff was asked to give his advice to viewers on CNBC. What were the best positions to be in to ride out the market storm? And without missing a beat, Jeff answers cash and fetal position. Good advice there in October of 2008. Still a few months to go before the ultimate bottom. Fetal position
43%. It turns out that was a great place to hide, JC. Cash and the fetal position. You didn't necessarily. You could dance. You could do whatever you want. Once you got the cash part right, you were fine. But I've got friends, conspiracy theorists, who suggest that the New York Times wrote that entire op-ed just to kind of encourage Americans not to hide because the consumer is so important to the market. But who knows if that's true or not? But yeah, it was a weird time, man. It was. There were a lot of people watching the show live, and we were sort of trying to break down stuff that was happening in real time. Another similarity, they kept changing the rules. They had all those banking laws that they kept changing, and they kept saying, we're going to bail out these guys. We're not going to bail out these guys. You have a lot of that today where all of a sudden you just have this kind of 25% tariff on Canadian goods. I mean, is that hockey pucks and maple syrup? What the hell is that? What does that mean? I don't know. It sounds expensive. I think
there's probably materials involved in there. I don't think it's just hockey pucks.
But mostly hockey pucks. I mean, like probably live bait, like minnows. Probably like 85% of the live bait market is Canadian. That's going to be expensive. That's going to leave a mark.
For the fishing community is going wild. All right, let's get into current markets. The consumer leading the way to the downside. Monster moves out of consumer in the back half of last year to the upside, led by Amazon and Tesla. It's been the exact opposite this year. The consumer leading to the downside. Never a dull moment, Jeff. Worst performing sector this year?
Yep. And you know what? We've lost it's you take them kind of group by group. And so we had discretionary had a tremendous run. And then people got defensive. Well, Staples is not quite as defensive as you think, particularly when the two kind of darlings of that group, which are Walmart and Costco, they're really inflated. If they're trading at all-time high multiples, that's not the hidey hole that you think, because even Walmart's still making 45% of their money from things that are not just groceries. And it's just a really tough business. Again, unquantifiable negatives. And so what we saw in Walmart is what we've seen in a lot of these retailers that reported okay numbers. Walmart was cautious, but they figured to be cautious. That wasn't unexpected. What kind of has come as a surprise is the relentless selling since then. It's a pulled up a card of Abercrombie is a good example. A former darling in particular, that stock has been absolutely woodshedded for a month straight. Like 4 or 5 days up in the last month and a half. We're taken up on the woodshed and had the crap beaten out of it by the armed thugs. Look at that. That's just relentless. That's you can want to defend that stock. You can want to fight for it. It seems like it's cheap, but that selling wave comes in day after day after day, and you should see a bounce at that point, but you're not. They didn't really do anything horrible. They just kind of are reaching sustainable margin point, and that's not good enough. In this growth-obsessed world, these stocks were priced to be growing at 20, 15% at least per year, and that's not sustainable forever, and the companies not doing it are falling apart. And so I think the trade to the extent is not necessarily defensive, but sort of the underrated companies that don't really have high expectations for this year. That's the only place you want to hide in the long side. Otherwise, I'm not sure how greedy you want to be on the shorts. It's not natural behavior for stocks to move in the same direction every single day. That's like roulette wheels that are red 95% of the time. The casino's not going to stay in business all that long. So at some point, these should reverse, but it's not yet, and you don't get any points for nailing the exact day.
I got to say, throw up on slide 7 there, Spencer. I mean, I have been doing this technical analysis stuff and charting stuff for quite some time. The Death Watch formation, that's a new one on me, and I don't know what that means. You're going to have to explain to me what Death Watch formation is. I have a pretty good idea with some deductive reasoning here of what it might be, but man, what a name and what a drawing. I got to tell you, I take a lot of pride in my charts. I get a lot of compliments on my charts, obviously, for many years, but man, I don't know. I think yours got to take the cake here. You got some charts, bro, I must say. So
yours are a tiny bit more analytical. This is a little artsier, but sometimes they just speak to you a little bit. And this
tell
is
me about the Death Watch. This is too good.
The Death Watch chart is, I mean, look at that. That chart is basically where the scythe of death there, where the ominous portent of doom to follow. That is where Kohl's rejected 3 different takeout offers in 2022. The stock since is down now 90%. They reported this week, nothing good was expected there. I drew this chart up originally before they reported, just with a kind of get the hell out of the way. It wasn't a short recommendation. It was just a duck and cover. If you think the stock's cheap, it for sure is not cheap enough. And man, they reported an unbelievable disaster. It went down 20%, and it's gone down 3 days in a row since then. So they're not just kicking the crap out of these stocks. They're waking up, JC, in the morning. They're saying, you know what? We didn't kick the crap out of it enough. Let's go beat up Kohl's a little more. There is no kind of upside scenario for them. And what you're seeing on the consumer companies where the margins are razor thin in the first place, when you add tariffs, when you add these kind of random tax, these expensive sort of sticky kind of costs in the middle of their margins, all of a sudden Kohl's goes from just a cruddy retailer to one that is cash flow negative, which I don't care if you're running a lemonade stand, trying to keep your condos, or running a multi-million-dollar business. That's a bad thing. Cash flow negative is a bad thing, and it ends in chapter 11, basically. And so now Kohl's is on death watch. So you think
this is over? Because we're pushing 30-year lows here. 30-year lows, lowest level since 1996, believe it or not. What were you doing in 96, Mr. Lone Wolf?
Geez, in 96, I was in business school. I was playing golf at least twice a day, and I'd get a little pissy.
At least twice a day.
It was amazing. It was fantastic. You dedicated a good 7.5 hours to golf. It was glorious. That was fantastic. I had hair like Fabio, as I remember. No, actually, I'd already been shaving my head by then. But no, that was a long time ago. I mean, the idea that if you had
this is over. The Death Watch formation means this thing's on its way to zero. It's a death spiral.
It means that's what people are watching for. This is a death spiral. All of a sudden, Kohl's is refinancing a big block of debt, and they have to do it in the next 6 months. They just turned in a quarter that was a disaster. Their margins are eroding and pretty close to zero in the first place. If they tip negative, it's going to be really hard to refinance. And so you're taking some of these marginal retailers that just have nothing going for them, and it becomes more expensive for them to stay in business. That's what the Death Watch sort of means, is there comes a point where they tip over and they just don't have the cash to dig themselves out anymore. Kohl's isn't quite there yet, but they're getting awful close. And that's how you end up with companies where the expectations are low already, but the stock goes down 30% in response to earnings that weren't really a shock.
Who was trying to buy them? Anybody I know?
Oh, geez. They had Starwood was or the dude who did
private equity.
Yeah, private equity was looking to buy. I mean, Arcos, they kind of the financing got sketchier as they went along. Some mall companies, the guys that own Vitamin Shop, were trying to buy them. Yeah, enough people were kicking the tires that they really could have hit the bid. They had bids from the mid 50s all the way to over 60. They turned them down, which kind of, if you're on the board of a company, I've been on the board of public companies, they tell you all kinds of secrets. You get to know all kinds of stuff, all kinds of things that are coming down the pipe, some good, some bad. it hit the bid. Macy's is another company that's in the same situation where, thin margins to begin with, everything's getting more expensive on the inflation side. It's going to pinch their margins to the extent they're importing goods. Why does that company need to exist in the size it is? Well, they don't necessarily, and that just is not a recipe to buy. It's hard to be optimistic in that situation.
Let's talk about American Eagle, because gotta tell you, it looks just like Kohl's. And if Kohl's is on death watch formation, I don't know how this one isn't. Again, well done on the chart. Like seriously, I have like such chart envy. And I don't normally have chart envy. Like there's like technicians out there that I love their work so much that I have some chart envy, but like this is next level, Jeff. Well done, sir.
Thank you, thank you. Well, that wing on the left there, his left wing looking at him, screen right. That's going to go to $10, and it looks like it's going to get there right after hours tonight. They reported numbers that they did the same thing that every other company has done so far. I haven't had the chance to look at it because we've been talking, but they beat last quarter, and I'm guessing they were cautious for the current environment. A company like American Eagle, they used to trade really in lockstep with Abercrombie before Abercrombie was a 10 bagger. American Eagle never got out of that sort of sketchier part of the mall. And it's a company that, when it rains on Abercrombie, it absolutely is a torrential downpour on American Eagle. So I think their margins are getting squeezed, and I think it's impossible for them not to be cautious. They're not extremely well managed. They've got a ton of stores. And the consumer, as we talked about at the time, they hit the wall in February. I'm not sure what happened, but enough kind of pressures, headlines, tensions, whatever you want to call it, but people stopped spending a little bit. You already saw it from Delta. You saw it from a bunch of different companies in a lot of different spaces. That's why I don't just look at the retailers, JC. I'm looking at, when Delta says the consumer led the slowdown and then the corporations followed, well, that kind of tells you a lot as well. That becomes a consumer company as far as I'm concerned. They warned yesterday after the bell, and it's just part of that relentless news cycle that is the negatives. It's creating short opportunities, but you got to be quick. Man, you're either trading this market or you're just hiding from it. And that's kind of how we're going to help people make some money in this, is help them kind of retain money by not buying every dip.
Speaking of dips that don't stop dipping, this Target, woo,
woo. It's grim, man. It is grim. It's the hometown team, Jason. And I don't like to crap on the hometown team, but you give a report card.
You gotta tell it like it is, Jeff. Don't hold back, brother.
Who the people who really love you, JC? They're the ones who tell you the truth.
Of course, your friends are always breaking balls, of course.
Right, exactly. And the truth is, you look at, I need at least one of these three factors to work. I need the fundamentals to be good. Target has eroding fundamentals. Their earnings are going to go lower. Their sales are going to go lower. I need the technicals to work. Does this look like a chart that you want to jump in front of, JC? Because it doesn't look like one to me.
Not with your money, Jeff. Not with your money.
No. See, like at 106, we've got that little dingle thing there at 2023. That's not going to be support. That doesn't look like a rock solid base of support that everyone's going to jump back in. It looks more like an $80 type of affair. So the technicals are horrible. And the narrative, well, I've just spent the last 5 minutes crapping on Target. We didn't even talk about it beforehand. I haven't even gotten into the fact they don't know how to merchandise. Their inventory levels are a disaster. The stores are messy. They're still getting a bunch of shoplifters, and everything's locked up. And so half the merchandise is basically unshoppable. They got some problems, and they've got a CEO who's going to be in place for another year. This is a great example of a company. It's you can consider it a short. It's down from $260. It looks like a short. You're picking up pennies in front of a steamroller. Eventually, it's going to bottom. What it is for sure is just an avoid. There are just easier situations to get involved in. And it's where you're going to find buyers. Institutions don't want it. Some people are just buying it out of stubbornness or that it looks cheap, but nothing's cheap in this environment because their margins are going lower.
Yeah, guys, pay attention to what he just said. So, he's talking about it. Could he short it? Sure. Do you want to buy it? No. But it's probably better just to avoid it, right? Like, the way I look at it are like headaches. Do you need that headache? I'm not saying this one in particular, but just in general, like when you're putting on a trade, do you need that added aggravation? Like you better have a good reason. And with something like this, I just, obviously Jeff agrees, like I don't have a good reason to be involved in this short. Better just to stay away, looking for other opportunities. So
you
guys,
stay liquid
really,
enough
really
that
important.
you can sleep. Thanks. It's something that you do this long enough, you learn stuff. You and I are obviously on the same page in this. I used to say when I was on CNBC, sell until you can sleep. Like if you're just staying up at night, if you're worried about this, if I need Target to rally, I'm so long that if this goes below 100, I'm gonna, blow it up, and I'm gonna be in a margin call situation. It's for sure gonna go below 100. Like it's that's just going to happen. That level of tension is no good. It makes bad decisions. So people need to stay rested and just kind of avoid this stuff, and choose your battles. This isn't one you want to be part of.
All right, so this next one is a really interesting battle that we've been a part of. You've been a part of it. I have a suspicion that we're going to be part of it again. The first of all, the Christmas tree of death. A lot of mentions of mortality in this video, Jeff. Lot of mentions of mortality. The Christmas tree of death formation. Wow.
It's the circle of life, JC. We can't be afraid of more of death than we are of birth. I mean, it's an ebb and flow, but that's a pattern where, again, we talk about patterns that just don't occur in natural business relations type of things. What we saw during COVID was a lot of these companies that kind of came out of the pipes. They were sort of designed for COVID friendly people. Lovesac is one of them. Peloton, of course, is the poster boy of them.
Sure.
Stitch Fix, the food delivery guys, everybody who is like, we're going to be a society of hermits. This is just the way it's going to work. We're not going to have children. We're just going to have pets, and everyone's going to vaccinate 50 times a day. That's the future. Those companies went up like 10, 12 fold coming out of COVID. That was 5 years ago, almost to the day that we're talking. Those stocks spiked. Most of them left for dead. Some of them deserve that. But you have this tiny little fistful of companies that have survived.
Yeah, let's go to the next one, Spencer. Go to the next one. So this is really interesting to me. So they didn't die. So Peloton, Stitch Fix, Real, these are darlings of the post-COVID boom and bust. And so these just didn't die. You think there's opportunity here? Because I do.
I think there's huge opportunity there, because I think they think about the adversity that they face. Think about the business changes that they've made. You forge steel in the hottest kilns, man. And if you were something like a Peloton, they've been through 2 different CEOs. They've been through different regimes, different marketing strategies, different production cycles. They've sold off inventory. They figured out how to live. And once these companies go cash flow positive, they're nice little earnings generating businesses. Stitch Fix reported last night, at first people bought the number, then they sold it down just because it's kind of market where they're going to sell it down. But if you look at the fundamentals of that company, they're picking up men subscribers, they're picking up more cash, they're becoming kind of operationally a cash flow self-sustaining business, and they've found an identifiable niche that they can be part of. Private equity loves companies like that. They'll take any of these companies over at least 2 times where they're trading right now. Now, this is a bet on America. If we go into a super deep recession that impacts the Peloton customer, Peloton, I like them. We've talked about them before. What I like about them is A, it keeps my legs nice and veiny and manly looking, but B, it has 3 million subscribers and none of them ever quit. The people who like it, and they don't really need growth because they have a really sticky subscriber base that's sending them $40 a month. Now you have a super deep recessions that makes it guys like me want to unsubscribe from their Peloton because they can't afford to work out. I don't think they're really in that kind of danger. I think it was more of an operational issue with them. These companies are going to be super volatile, but if you give me a group that, I want a basket trade that I'm going to make over the next 2 years, because it's going to be bouncy along the way. Stitch Fix had a 30% range today. That's not natural trading. I don't need to watch that every single day. I'm not going to day trade in my basement all day. I'm going to make a bet on some of these companies and just consider it an investment and give it a couple of years to cook. And this basket of names that didn't die post-COVID, man, I like something that's been forged in a little bit of heat, JC. I like these tested type of companies.
Well, you also made a lot of money on Peloton off those lows, and so did we. So we're a little jaded. We really like these, but at the end of the day, that's really how markets work. Money goes to where it's being treated best. And I guess we're some good examples of that, because while somebody might be like, oh, Peloton. Well, we actually have a really good taste in our mouth from Peloton, so we don't think about it like that at all.
People bag on it all the time. I love a company that's a joke. Lululemon was a joke for a really long time. JC, people used to be like, "Oh, yoga pants, oh, you look like David Lee Roth," and those things. It's like, David Lee Roth was awesome. Screw that. These are great pants. I'm there. That's been a huge winner. I think that Peloton, again, it's still there and it still works as a company and as a workout.
All right, guys. So this I think is really important. So pay attention to this. This is where you want to take notes. This is really where you want to think about your process and how you can add some of this. This is really fascinating stuff, and it's really about how you come to the conclusion. So you got the universe of stocks, where you have, of course, traditional retailers and traditional consumer stocks, but outside of that might be considered an industrial stock or something like that. But if the consumer's using it, that's part of the universe. Things like Apple, things like Uber, that might not be considered, consumer discretionary, but still fit the bill. Let's talk about then how you wind it down to the name. So obviously you're looking at trends. The only thing that pays is price. We know that. We know that asset prices trend. We know that momentum exists. All of those things, we discussed that. Now, you're looking for two things in particular, and you're looking at it from two different angles, Jeff. And that's what I want you to explain to the audience. So, guys, pay attention to this. The first thing is the management, right? You talk about how there needs to be a vision. There needs to be a very simple, consistent message from the management. Then we'll get into the trends themselves and the consumer. But the management itself, what are you looking for exactly?
When you're going to analyze these companies, JC, if it's a consumer company, I want the CEO to be telling me how he wants consumers to experience his product. What do I look for? I walk into a Walmart. What do I expect? You know what Sam Walton told? He told everyone who worked there. They hired the guy at the door, right? They greet you and they hand you a freaking little pamphlet every single time you walk into a Walmart. That is a deliverable expectation. And damn it, if you didn't do that when Sam Walton was there, your ass would be chewed up and down. But everyone did it because it's simple. You look them in the eye and smile. A nice, simple rule. That was Walmart's entire strategy for how to greet a customer. A nice, simple baseline rule that the entire chain can understand. I need that from every single one of my consumer
companies. Give me another
companies.
example. Give me another company, another example.
Give me now Target stores. A Target store better be clean. A dirty Target store is an F you to the customer, quote Kenneth A. Macke himself, my dad. It's my old man. You walk into a restaurant, you know what? You need to be at least seated, addressed by somebody within 5 minutes. You walk into a hotel, your elevator better be there on time. If you don't have the elevator on time, you better put a mirror on front of your elevator. That's why every single elevator you go into, every single hotel has a mirror, because it wants you to kill time, to just kind of relax right there. Starbucks has a 4-minute deliverable. The new CEO came in. He said, we're going to serve people coffee within 4 minutes from the time they order and they write down your name to the time that they hand it to you. And they say, here you go, JC or JP or however they get your name wrong with the felt tip pen. It doesn't really matter, because to give your coffee in 3.5 minutes, that's perfect. That's aces. I see that CEO come in for Starbucks and he reduces all the bullshit debates that they've had about unions and how the bathrooms are going to be public domain and we have people hang out. We don't. How about we deliver coffee within 4 minutes? That solves so many of their problems. So I want the management to be in tune with what the consumer wants and relatable from what the entire chain needs to hear as a leader.
Now talk to me about the other side of it. All right, so the CEO's got a message, right? He's got some vision. So what? Right? The consumer, if it's a consumer doesn't care about the damn message, then it doesn't matter, right? So how do you identify the trends? Like, I know we joke like, teenagers and hot moms. Is it that simple, or is there more than that?
It's not quite that simple. You got to think about it a little more. You have to kind of think you have to be a little OCD about it. We just talked about the Starbucks in 4 minutes thing. I love that as a rule, because if you go in, you'll feel it. If you're there for 5 minutes, I guarantee if you go to order a coffee right now, and you're probably like most good-hearted people, and particularly Americans, a coffee drinker, you need it in less than 5 minutes, or else you start to twitch, or else you start to kind of intuitively start to fall apart. As a consumer, I love it as a message, as a consumer investor, because I can test it every time I walk in. I can feel it every time I go into a Starbucks. You can walk in, you can say, is this store clean? Was I welcomed? Does it have an overwhelming selection? And most importantly, when I give them my order, if I start a stopwatch, do they have it in front of me within 4 minutes? I can test that, and that tells me whether or not they're executing. Now, what the stock does, well, that's the similitudes of life kind of indicate that maybe we won't know for sure on a day-to-day basis what the stocks are going to do. But as a consumer investment, which is the only type of trading you should be doing in this space on the long side right now, if they're executing a clear vision, then I know that company's on the right track. I've got management married to what the consumer experience is, and they're both working together to create a more profitable company. That's going to lead to a winner overall. In the very long spectrum of time, companies that execute on those two levels usually win.
Let's zoom out a second on I mean, just the approach is, I mean, it makes sense. You're looking at it from both cases. You're looking at it from the management, are they able to execute? And then the consumer care, right? That's really what's driving it. A few of the things that I love about this space and why I love talking to you, I mean, it's all around us. Like, you can't avoid it. Like, we use it every day. We see it on the roads. Like, there are consumer stocks, whether they're traditional consumer stocks or otherwise, everywhere. When you talk about consumer spending being 70% of the US economy, when you add other things, it's probably even more than that. Again, I'm not an expert, but it seems like it's everywhere and you can't avoid it. The best thing for me of all of this stuff, in addition to it being very simple to understand, they sell pizza, they sell sneakers, right? They sell cheeseburgers, is just how wide the dispersion is on such a consistent basis, right? You're always going to have winners. You're always going to have losers. Winners turn into losers. Losers turn into winners. And this is regardless of whether we're in a healthy bull market and a bear market. There are names that are popping up constantly. There are new issues that are coming on, whether it's a restaurant chain or a sneaker company or a clothing brand. You're seeing it again and again and again. So this is a space that I want to pay attention to at all times. And then because you have that long short component to the portfolio, what it does is it really adds an additional layer of diversification for a portfolio, particularly, like, selfishly speaking, particularly my own, that I'm constantly striving to add additional uncorrelated layers to what I'm doing. Spencer, if you could skip over to slide 15, show everybody how they can get access to Jeff Macke's portfolio. If you are watching on YouTube, the link is in the description. If you are on the website, just click the link below. Do I have that right, Spencer? Is that right?
You have it right.
How about that? So this is $24.95 for Jeff Macke's live portfolio. As a founding member, you have access to this for $9.95 for the entire year. This gets the entire portfolio with the buy and sells, longs and shorts throughout the entire year. Of course, the bonus trade ideas, when they come about, usually on average once a week, once every couple of weeks. Obviously, we want to get access to Jeff, right? That's the key here. I want access to the man. So as a member of Jeff's retail roundup, you get access to those weekly calls where you can ask questions, you can kind of weigh in. I know that Jeff benefits a lot from hearing from the consumer, right? This is what we're doing. We can't help ourselves. We're looking for that feedback. We're looking for those questions. Having a community like this increases the eyeballs out there, right? We got boots on the ground all over the country and all over the world that are observing other people's behavior and bringing that to our attention. Like, this isn't like a selfless exercise here. We're all winning with that feedback. And Jeff, I know, that's something that you've been able to incorporate forever because you've been in the public eye for so long, right?
I want some synergy, man. You need the back and forth. You need to be kind of boots on the ground. I'd love to go to stores. I'd love to hang out with just people, everyday folk going out into the stores and just see the way the stores vibe. I want to get that feedback. I want to have back and forth with the subscribers and talk to them about these trends and just try to help them navigate. These are some of the best trading stocks on earth, JC. I mean, I don't have to defend companies that are moving 25% a day either way. If you want to trade them, we're going to figure out how to trade them. If you want to invest in them for the long haul, that's where that interaction is going to be important. And it's already, the feedback cycles are kind of picking up. I heard some folks who had a bunch of Cole's puts going into the number the other day. Yeah, I didn't have myself there. It's like, that's a great idea. It's a collective, man. It takes a village and everyone's kind of picking it together. And we're trying to figure out the best ideas and the best way to navigate it. it's not pure altruism, but it's a lot of fun. And we're going to treat it like a consumer product and tell you what to deliver. You're going to get access to me. We're going to talk to you as news warrants, on a weekly basis, kind of keep it as an ongoing exercise in making money and helping people avoid some losses. And I'm looking forward to it. It's exciting stuff.
No, it is. It's super exciting. And not to mention, talk about burying the lead, the earnings report cards around earnings season. I mean, like that, let's, all the others, like the portfolio is fantastic, obviously, because we want to know what you're buying. We want to know what you're selling. And the trade ideas, obviously, that's table stakes. But I mean, let's be serious. Like, this is tremendous value add, having those report cards around earnings season where we know going in what we're looking for, trades that we're able to put on immediately thereafter. And that's the segue that I want to make here, but wait, there's more. After those earnings releases, oftentimes you get that, compressed volatility in the options market where that premium just disappears post earnings, and you could buy options very, very inexpensively afterwards if that's something that you want to be doing. So if you're interested in the portfolio, that's great. Click the link below. The link is in the description on YouTube. But if you want the options trades too, you have access to that also as a founding member. Again, $14.95 for the year, where you're getting Jeff's portfolio, you're getting the weekly calls, you're getting the trade ideas, you're getting the earnings report cards, but now you're getting the options trades too. And I don't want to spoil it or anything, but there's an options trade put on today immediately. So as soon as you click the link and you join Jeff Macke's Retail Roundup, you get access to the entire portfolio, of course, all the buys and sells, and the fresh trade that was just put on today. And I like it, Jeff. And we were talking about it in the meeting today, and everybody's like, I kind of like that. So,
we're grinding out profit. It's an organic. We're not putting on trades to kind of fill in a bucket. We're putting on because we see the opportunity and we're trying to make money for ourselves and for the people watching at home. And that's kind of what it's all about. And another thing I'd point out, Jason, you mentioned the earnings stuff. The consumer oftentimes leads these things. And where do we hear first about this recession, which now is taken as just an assumption, right? But 3 weeks ago, no one was talking about that. Walmart reported, they told us the consumer pulled back a little bit. Man, talk about a red flag. Talk about something that no one wants to pay attention to Walmart's earnings report. Well, if you're kind of a dork like I am, I like the guys that run it. I kind of know the people who are in charge, and I want to hear what their tone is. They were the warnings of this. They were the canary in the coal mine, and they were dead right away 3 weeks ago. Man, if you look at these stocks since then, if you look at the entire market since then, it's been a disaster. This is where the action is. This is where you got to be in tune with to kind of know where the next step in the market's going to be.
Yeah, for me, there's a ton of value in the portfolio, Jeff, and on the, report cards after earnings and before earnings and all that stuff, but for me, I want the juice. I want the options trades too. So guys, if you're listening out there in internet land and you're like me and you want the options trades too, go ahead and click the link on the YouTube description if you're on YouTube, or click the link below if you're on the site. And by the way, this all comes with Rangefinder. So for those of you who are already familiar with Rangefinder, you get it. If you are new to Rangefinder, all of the trades in the portfolio are tracked on the Rangefinder app. So Spencer, if you want to show them what that looks like, once you're logged in, you get access to the trade. You get access to if you want to show the P&L, so you can see where within range, you can see the implied volatility of the position, where the current price is relative to the ideal entry point, where current price is relative to the target price. You could take all of the trades in the portfolio and sort by best risk versus reward or biggest mover of the day. Or you can sort by different industry groups within the consumer, if that's something that you want to do. But the Rangefinder really gives us the ability to, organize everything in a very easy to consume way. Because, when you talk about a portfolio and trade ideas and in the past, people have used like spreadsheets to keep track of these things. That's ridiculous. We don't need to do that anymore. We have the system in place. We spent, I don't know how much money and how much time over the years building this. So the fact that we can take Jeff Macke's portfolio with the trade ideas, with the options trades, and plug it all into Rangefinder so it's all easy to consume. I mean, Jeff, who's better than us, bro?
No one, man. You crack the code on accountability. You can actually be relatable and accountable at the same time, man. That's like magic sauce. That's alchemy. That's fantastic stuff. And for a guy like me, I don't mind the accountability. I love the accountability. Bring it on. If I'm not good at this, then fade me. Fade me. I'll add value that way. Let's just make it accountable and let's share some ideas and get a little synergy going, make a little money.
Listen, you've got the core portfolio, and in there you got, half a dozen names that are just a core part of the portfolio. There's one name that you have to own. You can't miss it. You have to own it. You got a couple up and comers in there. Some future, potential 3-baggers, 5-baggers, 10-baggers. I mean, these are consumer stocks. These are the types of returns you get in these types of things. So you're going to have your large caps. You're going to have your mid caps. You're going to have your small caps. And by the way, that's really a function of the way the space works, Jeff, right? Like you got your behemoths, you got your up and comers, and then you got your little guys that are the long shots that are either new little guys or recovering. In some cases as well.
Absolutely. People give up for dead. I don't view them that way. I view them as loving relationships. That you spend some time with them. Abercrombie, we had wonderful times together. We don't currently have a thing. I'm a little afraid of Abercrombie right now, but we've had Etsy. I was long Peloton when it was the bubble the first time. You never break up with them because eventually it becomes an investment again. If they survive long enough, you get to redate them and look back on it. And there's always a winner and loser in these space. And you know what? They come and go. How many times has your wife probably told you, never should have thrown away like the boot cut jeans. Boy, those are back in style. My skinny jeans, my mom jeans.
My wife don't throw away anything. She's such a hoarder. She waits for them to come back. She says they always come back.
They always come back. Exactly. Usually the stocks do too.
So she's right. So I shouldn't fight it because she doesn't throw. We have so many clothes that she doesn't even wear, but I should leave her alone because she's probably right.
Yeah. Just give it time, man.
All right.
It's in a long enough frame of time. Eventually, you're going to get the "I told you so" speech, and that's okay. That's
folks. You see, you're literally watching in real time. Every time I talk to Jeff, I mean, how long have I known Jeff? I don't know, 10 years more. I don't even know. I always learn something new. I'm telling you from the bottom of my heart. There's nobody else I want to talk to about the consumer that's not Jeff Macke. So for the first time in the history of the stock market, you have the ability to see exactly what's in Jeff Macke's portfolio, what he's buying, what he's selling in real time. And then if you want the options trades too, which I definitely do, obviously, you have access to that as well. Those weekly videos are great. The report card's great. Selfishly, I'm here for the options trades. Jeff, I love you. The portfolio's great. I want the trades. So guys, if you're like me, click the link below, or if you're watching on YouTube, link is in the description. Mr. Jeff Macke, you are a legend. I appreciate you. And everybody out there listening, click the link below, get involved, and we'll see you in there. I think we will.
Absolutely, baby.
Thank you, Jeff.
Thank you, JC. It's been a pleasure.
Adios.